Welcome back. We're looking now to the global oil market, which of course was stable today as rising U.S. crude production and inventories were countered by expectations that OPEC will extend an ongoing production cut during a meeting at the end of this month. Brent crude futures, the international benchmark for oil prices, were at $61.98 per barrel, 11 cents above their last close. U.S. West Texas Intermediate crude futures were at $55.37 a barrel, 4 cents up from their last settlement. U.S. crude production hit a record of 9.65 million barrels per day, meaning output has risen by almost 15% since their most recent low in mid-2016. Despite this, analysts say prices were relatively well supported due to efforts led by the Organization of the Petroleum Exporting Countries to withhold oil production in order to tighten the market and prop up prices. The deal is due to expire in March 2018, but OPEC will meet on November 30 to discuss policy, and it is expected to agree on extension of the cuts. And for more, let's talk to Desola Simoni, one of the research analysts with Financial Derivatives Company, joining us from New York City. Good morning, Desola.
Good morning, Chimeze.
Well, it's morning where you are, but it's afternoon here. Right, oil prices have been declining week to date. What is responsible for this price movement? Is it just about the recent IEA report, or there's more to it?
There's actually more to that, to the decline in oil prices, apart from the IEA report, which revised downwards the forecast for global demand growth in 2017 and 2018. We've also seen the EIA reports, which showed that U.S. crude stockpiles actually increased by 1.9 million barrels compared to an expectation of a decline in crude stockpiles. Also, the U.S. crude production is actually at the 30-year high of 9.56 million barrels. Furthermore, data from Baker Hughes showed that U.S. oil rig counts increased by 9 to about 738 rigs this year, and this was the highest rig count since June 2017. These factors put together are having like a downward effect on the oil of prices, and that's why we are seeing the decline.
Now, do you see these prices declining below $60 per barrel in the near to medium term?
Possibly, and I'll tell you why. Up until yesterday, the consensus was that the OPEC meeting scheduled for November 30 that OPEC would reach a consensus to further extend the production cuts for another 9 months. However, in a meeting by the Russian minister and the CEOs of key oil producing companies in Russia, they actually yet to reach an agreement about whether or not the production deal should be extended, and even if it should be extended, for how long should it be extended. So these factors may actually play into the price of oil, and the $60 has not yet been established as the price floor for oil. So in the event that the production deal is extended, yes, the price will remain above $60. But if it is not extended, then maybe we might see it decline below $60 per barrel.
Now, for you as a research analyst, what do you expect to see, or what do you see as the outcome of this OPEC meeting by November 30?
I think that the agreement will be to extend further for maybe another 3 months or 6 months, or maybe throughout the year. But I think that they would agree, that OPEC and non-OPEC members would agree to extend the production cut. And this is simply because all the countries involved are actually seeing the rewards through higher oil prices.
Okay, back here in Nigeria, the National Bureau of Statistics yesterday released the October inflation data, which showed a marginal decline in headline inflation. What will this mean for commodities prices?
First of all, I must say that this is good news for both policymakers and the average Nigerian. The consistent decline, the consistent disinflation in Nigeria it's remarkable, and it simply shows that we might begin to see this trickle into domestic commodity prices in the near term, because we all know that domestic commodity prices are sticky downwards, but with the consistent decline in headline inflation and also month-on-month inflation, they may actually begin to see trickle down in domestic commodity prices, and it is very likely that in the near to medium term, we'll see lower commodity prices.
And of course, the MPC meeting is scheduled to hold, that should be its last meeting for the year. That's on Monday and Tuesday next week. What do you think will be the outcome, and how will inflation play into that?
Let's first of all talk about the considerations for the MPC meeting scheduled for next week. The MPC will be looking at factors such as state of the economy. We all know that the economy recently recovered from a recession. We're looking at inflation, which has been declining consistently for the past 9 months, which is good. They'll look at exchange rate, which has actually been stable in all segments of the foreign exchange market, and some other factors. Now, inflation the consistent decline in inflation will strengthen the doves, will embolden the doves in the committee to further argue for a cut in interest rates, and also there are also strong arguments for a hike in interest rates. But we are of the view that at this meeting, the most probable outcome will be to hold all key monetary policy parameters.
All right, thank you very much for your time, Desola Sumoni, research analyst with Financial Derivatives Company in New York City. Move on now. Angolan President João Lourenço has dismissed Isabel dos Santos as chair of the state oil company Sonangol in a dramatic move against the family of the former president. Analysts say the change was likely aimed at cementing Lourenço's power and trying to avoid a decline in production at the country's biggest company, which has come under fire from international partners for delays in approving projects. The daughter of José Teodoro dos Santos, who ruled Angola for 38 years until stepping down in September, was replaced by Carlos Saratuno. Saratuno, an oil veteran who was fired by Isabel dos Santos from Sonangol last year, was most recently Secretary of State for Oil. And finally, commodities trader Glencore has offered Chad a grace period from principal repayment on a more than $1 billion cash for crude oil and extended the deadline for full repayment to 2025 from 2022. The Central African nation is under pressure to restructure its Glencore debt for a second time after the International Monetary Fund says this year that Chad's external commercial debt, mostly to Glencore, was unsustainable. The Swiss-based commodities trader and miner, which lent Chad the money before oil prices began tumbling in mid-2014, said in a letter to Chad's finance minister that it had hoped the proposal would satisfy the IMF, which was copied. Glencore held meetings with Chad's delegation in Paris last week to discuss the loan, but no deal was reached. And that's it on the program. Thank you very much for watching.